Hello, this is Brian Rezny, president of Rezny Wealth Management. We're doing an update video today about the economy and the investment markets. And as always, one of the things I stress to every client, volatility is normal. But how long does it last? I had a client call us a few weeks ago when we had that little bit of volatility, that 3% down day. Folks, 3% down days, 5% down days once a year, it's pretty normal. Whether it's stocks, bonds, real estate, volatility is normal. I do want to say, and I really appreciate, we only had one client semi-concerned about the volatility. One client out of hundreds. And really wasn't overly concerned, but, are we making adjustments? What do we think about the election coming up? Things of that nature. So I'm glad to say that by educating our clients about volatility, and it is normal, and it's going to be more volatile towards the end of the year, in my opinion. It doesn't mean that we're going to necessarily not make money by the end of the year, but it means that we're going to have volatility. But every given year we get 10 to 12% pullbacks in the markets, whether it's bond, stock related. But one of the things I want to stress is this. The volatility you saw just from a few weeks ago has subsided. In fact, that pullback that we saw, most of it has already been regained. So again, how long do these downdrafts last? It could be a day, week, it could be a year. We could have a year of a downtrend. Remember that until we go to new high ground. But just remember that it's normal. But with the economy, we're chugging along, folks. We don't see signs of recession. Numbers came out again this morning and yesterday on the inflation front. And again, they're less than were anticipated. These are good signs. What does this mean to me? I see a slightly slowing economy, slightly slowing, not recessionary. I see the job market generally good, especially on the employment numbers with hires and the numbers with really layoffs. So things are not out of flux, out of whack. We see a growing economy, a slowing growing economy, but inflation's abating. These are all positive signs. I realistically think the Fed will reduce rates in September from our indicators and from the research that we do. What does that mean? It means we're looking for the next 3 to 5 years to be really a bull market potential in the U.S. economy. I know we've got an election coming up. I know some people are Democrats, some are Republicans. They both spend money. Just realize that. Your candidate might not get voted in, or they might. At the end of the day, both parties spend money. It's just the nature of the beast. You may not like all their policies. So again, vote policy. That's probably the wisest advice I could ever give anybody. And if your candidate gets in, great. If they don't, the world's not coming to an end. We may make adjustments in our client portfolios based upon who's in office, based upon their policy, because there might be more opportunities in other places. But again, generally speaking, the economy is growing. Other parts of the world, not so much. China really is in a stagflation mode, meaning really no growth, and they have some inflation front problems. But again, a lot of that's self-inflicted by China. They're also getting major competition from India at this point, where India is actually a lower producer provider of goods and services than China. They used to be the leader. They're starting to lose some of that luster, let's call it. So with that said, we primarily are invested in the U.S., or almost 100%. We continue to like the larger cap growth market side of it. There's a lot of talk by Wall Street firms over the last month and a half how small caps were coming back, only to basically crater again and greatly underperform large cap. We are not investing in small cap at this point. We may never again invest in small cap, or we might. It depends what our research tells us and if there's opportunity. Our goal is to be properly diversified for the client, have normal volatility given that risk profile of the client, and have the opportunity to make a reasonable return for the client to meet your goals and objectives. So again, we're not seeing recession. We're seeing an interest rate cut probably realistically in September. We're seeing the inflation run, as we've talked multiple times, greatly abating. We're seeing a very stable U.S. economy workforce without major layoffs, especially by small companies, which are the major employer in the country. These are all net positives. So again, greener pastures ahead. If I look at the next 3 to 5 years, I think things are going to be pretty decent for the U.S. economy. And we probably will stick within that time frame and within that sector areas that we are currently with the U.S. When changes need to be made, we will make those changes automatically. Rest assured. We don't make changes just to make changes, and just because something goes down temporarily doesn't mean it needs to be sold. It means maybe its time has not come yet, or it's not recognized. As a client of the firm, if you have any concerns or questions, please call the office. And as always, we appreciate your referral business. In fact, we just landed a very nice couple from another client that referred them to us. Again, our business grows on referrals, and I can't stress that enough to you, the client. So if you are truly happy with what we've done for you, let your friends know. There is a huge difference in firms. As a fee-only fiduciary money manager, which by the Wall Street Journal, 2% of firms nationally are fee-only fiduciary money management firms like a Rezny Wealth Management. We feel you're in great hands, but of course, give us a call if you have any questions or concerns. We want to make sure you're happy and that you're well taken care of at Rezny Wealth Management. Have a safe and profitable day.